market news now. Asian shares nudged higher, tracking small gains on Wall Street, while the US dollar paused after a sharp rally as month-end flows lift sentiment and investors adjust to expectations of more interest rate hikes. Locally, higher canned fish sales have lifted the performance of the global fishing group Oceania, as it expects its headline earnings to increase at least 1/5. Earlier, we saw US index futures drifting lower, suggesting the pressure on stocks continues. Stocks logged their worst week of 2023 last week, only to rebound slightly yesterday, with the tech-heavy Nasdaq leading the gains. To talk to us more about the markets, we are joined by Martin Smith from Anchor Capital. Martin, thank you so much for your time. Your assessment of global market sentiment, and also what we were paying close attention to, and that was the China reopening story. And it comes across as though the rally is starting to fizzle out a little bit.
Completely agree with you on that take. I think you saw a lot of optimism in the market at the beginning of the year. I think it was driven mostly around monetary policy and the fact that investors thought that we might see cuts towards the end of the year from an interest rate perspective in the US. And there's a lot of optimism. Markets rallied incredibly hard globally, but like you said, seemingly running out of steam as the Fed is kind of maintaining their rhetoric of being quite hawkish. And it doesn't look like we're going to see cuts towards the end of the year. So you've seen a little bit of cool off of that and some consolidation. In terms of China, I mean, you've got to look at what's happened there since November around the reopening story. You've seen that market run incredibly hard. And I think what we're seeing there is not so much a loss of faith of the reopening. I think that's still very much on track. I think it's more about just a bit of consolidation, because the asset prices ran a little bit ahead of what the actual economic reality is. So I think a bit of consolidation, but that's very much still kind of ongoing.
So when you look at what's happening locally when it comes to our market, or even some of the stuff happening globally, what are your clients, wanting? Are they sitting on the sidelines, looking at probably playing it safe, or are they, looking for opportunities? What kind of conversations are you having?
I think all of those conversations, because again, every client's different, and some are quite fearful, some are trying to find opportunity. Some are just looking to build long-term positions and things that they like. So it is very much my job to educate them and say, cool, this is where we are factually. This is what opportunities there are at the moment. For example, you have really good yields in the bond market locally, or maybe we could start buying some really quality offshore shares in very kind of specific batches. So it's trying to get a very nuanced kind of perspective of what they want, and also trying to then implement that with opportunities that are there. But again, it is a difficult environment at the moment, because there are so many uncertain kind of things happening and that might play out. So it's just about educating and trying to find opportunities where we can.
So on that note, then, when we're talking about your allocation strategy with this kind of environment, especially for those clients who are looking for those longer term investment opportunities, what companies are ticking off the list for you, especially when you look at it from a balance sheet perspective? Is it companies with free cash flow and sustained dividends over time?
Yeah, I think it's a good point that you're on there. It's about finding quality companies. So companies with good return on invested capital, good management teams, nice earnings profiles going forward. Also getting them at a valuation that isn't excessive. Every investment manager has their own philosophy. We're happy to pay up a little bit for growth and quality, but we also try to do it at a fair multiple. So it's trying to get those things in place. But also, a long term has also changed. Long term isn't like it was years ago, where it's 5 to 10 years. It's now 2-3 year is kind of long term, because of how quickly the world is changing. So you can find opportunities to be, like I said, in SA bonds for 2 years, get yourself an 11% yield, and then maybe look to shift out. But in terms of building equity kind of content for clients, yeah, quality is what we look for.
Let's bring things locally for a second, especially when we look at it from an economic perspective. I mean, you look at these GDP projections, whether it's coming out of the SAB or it's coming out of the National Treasury. And then you also look at the fact that we've got this big elephant in the room, which is load shedding. What's your base case then for the South African economy, given all of these factors and possibly other things playing in the background?
I think to underline what you're saying is uncertainty. There's a lot of uncertainty in South Africa. at the moment. How does Eskom play out? What happens to growth? What happens to monetary policy? And because of that, I think there's a lot of forecast kind of uncertainty. You have economists and the SAB and everyone have quite a varying kind of degree of what they think South Africa is going to do in GDP terms. But I think factually, you have to look at it and say growth is going to remain muted. I think you'll probably see GDP of less than 1%. You're going to see higher inflation rates for longer. So probably another 25 basis points hike now in March and maybe another 25 after that. And again, just uncertainty. How long does the rand stay where it's at, being quite weak at the moment? What happens with Eskom? So a lot of uncertainty that could tip it in either which way, but definitely a little bit of a testing environment at the moment.
Let's talk about those interest rate, expectations and talk about it from a stateside point of view. You look at the numbers we've gotten out of the economy in the US. Are you looking at 50 basis points at the March meeting, or are you looking at a series of probably 25 basis points going into the year? How are you, looking at it?
I think with the States, also 25, same as what I'm thinking locally. Again, I think the market was really hoping we'd see a cut towards the end of the year, but the Fed has remained quite steadfast in their view that they will have interest rates stay kind of where they are or higher for the rest of the year, and only start to cut kind of the beginning of next year. But again, a lot of it remains to be seen. Like we're so data dependent at the moment that everyone's watching these CPI numbers with hawk eyes, trying to see what happens. So again, a lot of it needs to play out, and we need to see how things pan out. And you've got things like oil and issues in Ukraine and Russia. So again, a lot of uncertainty globally and locally, and I think that's probably reflected in why the stock market has been so volatile.
We have some SA companies reporting their results locally. Which one of the companies are you going to be paying attention to, or which sectors in particular?
We have quite a lot actually this week. I mean, and you've got quite a nice array of it, which will give you quite a nice take of where SA is and how things are looking going forward. So you've got retailers, you've got Woolies reporting, you've got the bank first round reporting. We've also got some stuff out of the mining sector, so Implats and Harmony. And then ones that I quite like to keep an eye out for is Aspen and Anheuser. So a lot across the range and quite big companies. And also just, I think it'll give us quite a nice take of where we are, comments on grey listing going forward. And again, just to see what SA's kind of future looks like.
All right, Martin, thank you so much for your time. That is Martin Smith from Anchor Capital giving us his perspective on the markets picture. However, as he mentioned, in terms of results, tomorrow we've got Cashbuild, and the following day we do have Santam as well as First National Bank reporting their earnings, and we'll unpack all of you with those particular executives. However, that is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.